Hooty hoo, all my stock market gamblers. Welcome today. It's Fed Day. We got the Federal Reserve coming out with their announcement on interest rates. It's an exciting day we got going on. So what we got going on in the markets? Well, the markets are actually up right now. Dow's up about 150. NASDAQ's up about 50. Now, the Federal Reserve, it's expected that they're going to come out and raise 75 basis points up to, will be over 3% then. Now, maybe the Federal Reserve shocks the market and goes 100 basis points. I don't think that'll happen. I really don't. Now, a lot of people think that the market's going to come down on this announcement of the interest rates. But you got to take into account that we already came down. We came down 4% last week on the market. So the market has been coming down. So if the Federal Reserve comes out and they say we're going to raise 75 basis points and then we're going to take a pause and see what the data tells us. Well, you'll see this big market rally is what you're going to see if they say they're going to take a pause, right? So anything can happen here. I'm not saying that the market won't come in. I'm just saying that it's almost time to see a rally again. Now where are we sitting? We're sitting right around 385, 386 on the SPY, right? Now, I do think we're going to come down to the 200-week moving average, which is down around 350. But we may not come straight down. We may get a rally up to 400 and then come down. You don't know how this is going to play out. Now, what I'm saying is that I think the market is discounting the 75 basis point increase by the Fed. Now, if we get 100 basis points, the market's probably not going to like that. And the initial sell-off may be down first, and then we get to bounce. But I think we can easily get a bounce up to the 400 level here before we come down to 350 on the SPY. Now, a lot of people in the a couple people in the comments, they think this is the big crash. They think that the big crash is happening. This is not the crash. You will know when the crash happens. You will know. You will see a debt explosion like the world's never heard before. The market will be coming down 70, 80%. This is not the crash. This is an orderly decline. Maybe it's a bear market. We'll say it's a bear market. And the downward drift will continue till we get to about 350 on the SPY. But this is nothing to do with the big crash. Now the big crash is coming, and I do believe we're getting closer to the big crash, but we're not there yet. We're not there yet. So let's move over and talk about the real estate market. Now the real estate market is breaking hard. It's breaking hard. It's coming down. It's breaking hard. Now, why do I say this? Well, they came out with the builder confidence, and builder confidence is in free fall. Now, why would the builder confidence be in free fall? Well, think about it. Last year at this time, they were selling a lot of homes. Right now, they're not selling a lot of homes. It's down 60% on volume. 60% on volume. Now, what would cause this volume to decrease like this? I'm telling you, I've been a real estate broker for 40 years. 40 years I've been, over 40 years. 45 to be exact. And I'll tell you that I've never experienced a couple of things that we're seeing in the real estate market right now. Okay, now here's what I've never experienced. I've never seen the mortgage rates double in a year. I mean, we went from 3%, and after the Fed hikes today, we're going to be up around 7%. We're at 6.4 right now is where the mortgage rates are, right? Then after today, we'll probably be up closer to 7. So we went from 3% just back in February. Back in February, we're sitting at 3%. Now we're at 7%. What did the price of a house do in the last couple of years? The price of a house, well, it went, let's just use rough numbers. The average price was, around $330,000, we'll call it. And today we're sitting around $440,000. So it went up about $110,000. The average price in the last couple of years. Okay, now in a lot of areas, it went up 20% a year, 20% and 20%, 40%, right? So in your area, it probably went up 40%, right? Well, okay, how much did the cost of a home go up percentage-wise? Well, it wasn't 40%. No, look it. You bought a $330,000 home at 3%. I'm just using rough numbers. But let's say you're paying around the $1,200 a month, okay? And now we're talking about $440,000 homes, and we're talking about 7%. I mean, it's up around $2,600 a month. So you went from $1,200 to $2,500, right? So the price to afford a home has over doubled. Now, did your income go up 100%? 100%? No, it did not. And that's why we're seeing that homes have come to a standstill. They're literally standing still. There's no one's buying, no one's selling. There's no meeting of the minds in the middle. And this has to change. Something's got to give. Something's got to break. Well, my opinion is it's going to be the prices that are going to break. Now, you might have the opinion that incomes are going to double from here. I don't see it that way. I see prices breaking. Now, in your area, that could never happen. But look at the volume. The volume is just at a grind. Now, look at, I've been around in the real estate business for 45 years. I've never seen it this slow. And now it's interesting because you got to go back not 45 years. You have to go back 70 years to find a time when single family homes were selling at a slower pace. 70 years. That's crazy, right? So we come to a standstill. But here's why the real estate market is really starting to break hard, right? Okay, it's these investors. Now, why in 2020 and 2021 did all this investor money come in? Well, because they were giving it away for free on Wall Street. They could go to the Federal Reserve and get this money for free. And what were rents doing at that time? Well, rents were increasing. They were going up like this, right? So the money was free and rents were going up. So all this investor money came in. It all came flying into the market. Now what's happened? Well, rents, they're starting to go down. Now, people aren't noticing this. The media is not reporting it. But rents are dropping, and they're dropping in a lot of areas, and they're dropping pretty quick. Okay, now the media, they got old news, but believe me, the rents are already starting to come down on apartments. All right, and they're building more and more apartments, 1 million units coming on when the rents are going down. So the rents are going down. Now, what's the cost of money doing? Well, you'll hear today when the Fed chairman comes out and announces the cost of money's going up, even to businesses and corporations like BlackRock and Blackstone. The price of money's going up, rents are coming down. So it's like the worst case scenario for these investors. So they want to get out of the market. I mean, we'll talk about Zillow here. Now, Zillow, they start buying these homes. They tried to corner the market in certain neighborhoods. Maybe in your neighborhood, they tried to corner the market. Well, what happened? It didn't work for them. Now they just had to dump all their houses. And they dumped them on what's called a company called Pretium Partners. Okay, Pretium Partners bought over 2,000 homes from Zillow in a lump buyout, right? Now, this company, Pretium Partners, they own about 100,000 homes, 100,000 rental homes. Now, why does a corporation need 100,000 rental homes? I don't think they do. And you'll see that Starwood Capital, they're a big owner of rental homes. Okay, so, but they're dumping 3,000 homes onto the market for $1 billion. They need to raise cash. They're raising cash, right? So they're going to dump 3,000 homes for $1 billion. Now, companies like Open Door, these were called iBuyers, right? And they were going to come out, they were going to disrupt the real estate business. They were going to get rid of all of us real estate agents because you don't need real estate agents anymore. And you have Open Door, they're going to give you an offer. Well, their offer was low and some people took it, but anyways, they couldn't get people to take their offer. So what'd they do? They started buying the houses above the market. And what are they doing now? Well, they're selling them below what they bought it for. Now, the old joke is, well, how do you make any money doing that? Well, we make it up on volume. We buy more homes and we sell them at losses. If we do enough volume, maybe we'll make money. I don't think so. But Open Door, they're doing the same thing that Zillow did. They are liquidating. They're liquidating their homes, right? Okay, so they've got to sell them at fire sale prices. They're not attached to these homes. It's not like the mom and pop down the street from you that are attached to their house and they're going to get the same amount that Billy Bob got because they're not going to take a penny less because their home's nicer than Billy Bob's. Plus, their home has a pool, so they got to get above Billy Bob. Well, no, those days are over. Look at you got Open Door. They're liquidating their homes in a fire sale. Over 50% of the homes are selling below what they bought them at. Look at a lot of people don't get this. You try to buy homes on a national basis. It's hard to do, especially if you're flipping them, if you're renting them. It's a dirty business. Look, you got to know the neighborhood. You got to know the area you're buying your homes in, or you're going to get your butt handed to you like Zillow did. You're going to get your butt handed to you like Open Door. Like a lot of these companies, they're coming in and they're just buying these homes. I'm telling you, it's a dirty business. It's not an easy business. It's a really hard business when rates are going up. Okay, so you get this company, but Mike, I heard this company BlackRock, they got $50 billion ready to buy homes. Well, they may have it ready, but they're not going to buy homes. They're not complete idiots. Okay, look at BlackRock back in 2008. They were in the home buying business then. They walked away with $1 billion loss back then. Nobody talks about that, but yeah, they got $50 billion ready to buy these homes. Now, okay, now maybe they do deploy the money. Well, how much would that be? That'd be about 1 to 2% of the market if they put their $50 billion in all in the same year. It would be really hard for them to control the housing market with $50 billion. But could they manipulate the housing market? Let's say they came to your area and they started buying homes in your area and they just concentrate on your area. Every home that came up for sale, they bought it. They bought it. Okay, so they got all these homes now in your area, and they got them for rent, but the rents are starting to come down. So what if they held these homes off the market? See, that's what I can't believe. The reason we have 15 million vacant homes right now is because a lot of these corporations are keeping their homes vacant. They're not renting it out. Because why? They want to keep the rents high. They don't want the rents to come down, and rents are already starting to come down, so maybe they have to pull more homes off the market. Sure, they can buy the home, but maybe they pull it off the market and not rent it out. What that does is keep rents high. They're trying to manipulate the market. Now, they can maybe pick an area and manipulate that market. Now, I think it's criminal what they're doing. I really do. But they can manipulate a particular area. They cannot manipulate the whole housing market. They don't have enough money. Now, the Federal Reserve, maybe they can come in and manipulate the whole housing market. Oh, wait, let me think about it. That's what they've been doing. They've been doing that by holding rates low. They've been doing that by keeping rates at 0%. They've been doing that by buying $3 trillion in mortgages so we could have those rates. Just back in January, they were like 2.8% for a mortgage. After today, we're going to be very close to 7%. Now, a lot of people don't believe me on this, but I think we're going to be at 10% this time next year, maybe even 12. Look, at 6 and 7% mortgage rates. That's very normal. That's pretty average, right? 3%, that wasn't normal. That was the Fed buying trillions of dollars, keeping them down, printing the money, keeping rates at 0%, and they caused this distortion in the housing market. Well, of course, the Wall Street buyers, they had to come in. Why wouldn't they come in? They're getting 0% money, and they can make 5% just buying houses and renting them out. They would do that all day long, but right now things are changing. The Wall Street money wants to get out because right now they're paying 4% for money, maybe even a little bit higher than that. So they can just make the money by putting it into a 2-year bond. They don't want to be in the real estate business anymore. They're running for the exits. This is going to cause downward pressure. Yes, we're in the first inning of this. Yes, we're maybe in the second inning. Sit back, enjoy it. It's a great ball game they're playing. They're trying to run for the exits, and it's going to put downward pressure. Now, of course, not in your area. Your area is different. There's no Wall Street money in your area. It's just mom and pops. There's all jobs in your area. Nobody's going to lose their job in your area. Nobody's going to go into foreclosure in your area. Nobody's going to get divorced in your area, and nobody's going to have to relocate from your area. So your area is going to continue to go up. Well, I don't believe that. I really don't. I'm telling you, the market is breaking, and it's breaking hard. It's breaking hard with the home builders. It's breaking hard with the Wall Street investors. Now, granted, this is just my opinion, just like my opinion today. Look at my opinion on the Federal Reserve coming out. I say they raise 75 basis points. We may get an initial downward drift in the market today, but we may get that direct bounce. I think we're going to bounce up to the 400 level on the SPY. We may get a down day today, but it's possible. Anything's possible. It's a stock market. This is just my opinion. You have your own opinion. You got to form your opinion. Anyways, I love Fed Day. Get out there. Have a great Fed Day, everybody. I'm Tall Mike. You like this stuff? Don't forget to give me that thumbs up. Why not? Why not? Bye-bye now.